So this is old data. I should have updated it, but I just wanted to give a sense of the funnel that we track, and at the end of March, we had 543 applications on our website, firstangelsja.com. That's where we take all the applications. And you can see that only 38% of those 543 people, the percentages haven't changed. The numbers may have, but the percentages haven't changed. Only 38% had completed the applications, which tells us that when people are looking for financing, and particularly for angel financing, many of them are not prepared with the information, their business plans, the details that an angel would want to see. You can see that for us, 23% of the completed applications got a chance to pitch to our network, and 73% of those pitching actually went through a due diligence process. Right now, we have invested in 19 deals to a total of $2.6 million US, and that's in 12 companies. So this gives you an idea of certainly what the demand is, but the fact is that not enough people are really prepared to go to the stage of getting an opportunity to pitch. And so we are going to be addressing that by actually starting a Caribbean-wide incubator called RevUp Caribbean. And I'm sure Shani will, when we are ready to share the marketing collateral, Shani will push it out to the clients at JMMB, both in Jamaica and Trinidad. That's my contribution. Thank you.
Thank you so much. Thank you so much, Ms. Glasgow. I had a question. So in terms of an SME comes in, you are First Angels Jamaica, but if we have a client in Trinidad, do you know where they can go?
They can come to us. We actually, about 20% of our applications are actually from the Caribbean.
Okay. So they can just go online, but they have to make sure that they're ready, as you said.
Yes. And let me just tell you, Shani, our incubator is going to be a 5-month program, online virtual program, right, that will include investment readiness, but also training in business management topics, because we find that even, when there are people who are ready to pitch and are ready to get investments, they're not ready to actually manage that investment. So we are going to be doing a lot of hand-holding, training. Each client in the incubator will have both an international and a regional mentor. We're going to do, in fact, at the end of it, McKinsey & Company is going to do a weekend retreat on how to become a great CEO. So it's going to be a program that's will be filling a lot of the gaps that we have seen over the time that we have been operating over the last 7 years.
Right. I know too, a lot of SMEs are always concerned about what percentage they have to give up. So is there a range in terms of that stake?
Well, it all depends on the valuation of the business and how much they're asking for, right? So that will determine the stake. As I said, we don't take a stake beyond 49%. Mm-hmm. And our average stake in the 12 companies that we've invested in is about 24%. That's the average.
Okay, that sounds fair. That sounds really good.
Yeah, I mean, it goes from 12 to 48. So, there's a wide range. And of course, some of those firms have got follow-on funding. So they would have had to have given up more more of the ownership over time as they get follow-on rounds.
Okay, great. Thank you so much. I know we might have some more questions, definitely.
Oh, I'm here.
So I wanted now to bring Carl Townsend into the conversation, because you will now deal with companies that I think would be a little bigger and who are now ready, as Ms. Glasso said, to probably exit. So can you tell us about that, how they go about doing that and going on to the stock exchange, and what Cap Markets does for those companies?
Again, just to give a flavor, you'd have heard a little bit about SMEs, what you need to do as you get up the curve, as you go through the business cycle. Sandra would have provided the context of angel investing and how angel investing assists SMEs, again, to increase and expand their business. And then there actually comes a time where either the SME, through its board, is looking for an exit strategy, possibly at the behest of the venture of the angel investors or venture capitalists or other investors, or it could be the case that the business has now grown to the level where you need to get additional capital beyond the capacity of angel investors or VC investors, or maybe just don't want to take on debt. So, one of the ways of accessing that capital is through the stock exchange. And so my presentation really was speaking about what are the things, the benefits, the pros, the cons of listing your company on the stock exchange, whether it's Trinidad or Jamaica. So just to give some context, and I'll start out with Jamaica since I have more information there. So quite recently, it was in the Jamaica Observer of September 5, the Group Business Development Manager of the Jamaica Stock Exchange was quoted as saying that as of August 2021, the market cap of the Jamaica Stock Exchange was 1.9 trillion Jamaican dollars, or approximately 12.5 billion US dollars. And that had grown from where it fell during the pandemic to US 993 million. And that during the same period, the market or the stock exchange had raised over 45 billion, or US 298 million, resulting in an annualized increase in value of 9%. So that shows you that the Jamaica Stock Exchange on a whole has been a very robust market and a good way of companies accessing capital. Since 2009, 42 companies have listed on the junior market of the Jamaica Stock Exchange, raising approximately US 850 million, and that the JSE Junior Market Index would have grown by 33% between August 2020 and August 2021, which is the heights of the pandemic. So notwithstanding what's going on in the world, people are still investing, people are still looking for good companies to invest in, and companies are still being able to access capital via the stock exchange, the junior market. So again, just to reinforce that point, you'll see this graph here showing you that the junior market index would have increased again between March 2016 and August 2021, increased by a CAGR of 11%, which is a compound annual growth rate. So the market continues to do very well. So what we've done, just looking at some selected companies that would have listed on the stock exchange, and if you look at this table, you will notice that pretty much, all of them would have grown their stock price. So if you take the first one, let's look at Access Financial. That was the very first company to list on the junior market of the Jamaica Stock Exchange. At IPO, that valuation was 503 million Jamaican dollars. The company raised 100 million by selling 20%. And today, that stock price has grown over time by 1,020%. And the PE as of September 3rd, 17.4 compared to a listing PE of 9.7. And you can see the performance of all the other companies, pretty much all of them have done very well since listing. And the experience that we've seen in Jamaica is that pretty much every company, barring one or two, that have listed on the junior market have seen significant growth in their share price, in revenues, in profits, in assets, in employment, and so on. So, even from a selfish perspective of the original founders, they would have gotten very wealthy from the day that they've listed until today. And and there are a few more slides to show you that. So if you look again at the revenue performance, Tesco, which is a gas station chain, they listed quite recently this year. The revenues have gone down slightly by 1%, again due to the pandemic. Tropical Battery has increased by 7%. Access Financial has increased by 735%, and Fontana by 32%, Mailpac by 78%. So that bears at the point I was making before. And if you look at the profit before tax of these entities, Mailpac has gone up 108%, and Mailpac has really benefited from the pandemic because they're a logistics fulfillment company, so they have benefited, similar to Amazon. Their profit before tax has gone up 108%. Access has gone up by 415%. Fast is up, Tesco is up, Tropical Battery is down marginally, but generally all these companies are doing very well. So, when you think about listing on the stock exchange, again, whether it's Trinidad or Jamaica, there are a few things that you have to take into consideration, one of which would be increased corporate governance. Now, if you've gone through, for instance, say a VC investment with First Angels, Sandra's company, then you have pretty much have had all these corporate governance things in place already. But if you haven't, these are things that you have to consider. These two independent board members, board subcommittees, about audit subcommittee and remuneration subcommittee. You have to now think about having annual general meetings, annual shareholder meetings. You have to think about regulatory compliance from both the stock exchange and, in our case, the Financial Services Commission. In the case of Trinidad, the TTSEC, you have to think about publishing annual and quarterly financial statements within stipulated timeframes as mandated by both stock exchanges. Mandatory disclosure, public disclosure of material information. So, if a senior executive resigns, for instance, that's a material disclosure. The company is going to do an acquisition, it's a material disclosure, and so on. So, those kind of things. And of course, as a public company, publicly listed company, you now have to have a different mindset in terms of how you manage the business. When you're a private company, you can wake up and do what you want to do in a day of the week. As a public company, not so much, because now you have shareholders that you're accountable to, and so on. And if you just drill down to some of the requirements, so the Trinidad and Tobago Stock Exchange has an SME market, similar to the junior market of the Jamaica Stock Exchange. So on the Jamaica Stock Exchange junior market, the minimum capital that you can raise the list on the junior market is 50 million up to a maximum of Jamaica 500 million. On the TTSE SME market, the minimum is TT 5 million and a maximum of TT 50 million. On Jamaica junior market, you need a minimum of 50 shareholders and you have to sell at least 20% of your company. On the TT SME, you have to sell a minimum of 30%, a minimum of 25 shareholders. Both stock exchanges require at least 2 independent non-executive board members. You have to have audited financial statements and the last quarterly unaudited financial statements as a listing requirement. Both stock exchanges require that you appoint a mentor. And the idea here is that the mentor would help the company to navigate and fulfill the compliance requirements as a publicly listed company. And the mentor is normally someone who has significant, excuse me, who has significant experience, either by being a member of a board of a publicly listed company or a senior executive of a publicly listed company, or other experience that would qualify them to provide advice and counsel to the board of this newly listed company. And as I said before, you have to have at least 2 board subcommittees, and the list on these markets has to be by way of a prospectus. There are a number of different ways that a company can list on a stock exchange. You can list by introduction and so on and so forth. But to list on these SME market or the junior market has to be by way of a prospectus. And the prospectus really is an offering document that would spell out, who the company is, what they do, how they earn their revenue, who are the executives, the board members, the full details about the company so that the average investor is able to make an informed decision to invest in that company. Apart from the fact that when you list on a stock exchange, the main motive generally is to raise capital to enhance and grow the business. Both the governments in Jamaica and the government in Trinidad and Tobago have provided a very significant incentive in those jurisdictions for companies to list on these markets. And that big incentive really is a corporate tax incentive. So for both markets, the companies that list on either the TTSE SME market or the JSE junior market, they get a 10-year tax holiday. And for the first 5 years after listing, those companies pay 0 corporate income tax. And for the second 5 years, they pay 50% of the applicable corporate income tax rate. So in Jamaica, that has proved to be a very significant incentive because the corporate income tax rate in Jamaica ranges from between 25% to 33 and 30%, depending on the type of company and the type of industry that you're in. So this has proven to be a very attractive feature for companies in Jamaica because they're able to reinvest that income tax that otherwise they would have had to pay over to the government treasury. But outside of that, as I said before, the companies you list, you can list and use the money that you raise.
And you can send it whichever one you tell me. I'm
sorry about that. Yes, I said that companies can raise capital to expand their business or to acquire other businesses. They can take that money to reduce debt and therefore reduce the overall interest cost and interest burden. And what we found is that publicly listed companies are able to access lower cost financing. Once listed, companies can then come back to market to raise additional capital, either through preferential offers, rights issues, APOs, and so on. And the beauty about this is that when companies list, as I said before in previous slides, we'd have seen that the founders generally are able to increase the wealth by virtue of their holdings in these companies. It provides for estate planning because now, they can transfer the shares to whether it's relatives or siblings, children or whomever. And because you transfer those shares across the exchange, you really don't have any very minimal transfer tax. Versus if you're a private company and you had to transfer those shares of a private company. Certainly in the case of Jamaica, it used to be that you had a very significant tax liability with that. What we also find is that the valuation of listed entities are generally higher than the valuation of private companies. And the other benefit is that as an investor, you are able to borrow against publicly listed shares that you own. So if you own shares, for instance, in a JMMB, you're able to go to a bank and borrow against those shares. Versus if you own shares in a private company, it's a lot more difficult to do that. And because the shares are listed on an exchange, it provides increased liquidity for the trading of those shares. What we also found is that for listed companies, they get increased visibility. And one of the reasons for that is, of course, that people are always reporting on the performance of these listed companies. And by virtue of that, people are speaking about what these companies do, how well they are doing, and in certain cases, how well they're not doing. But they get the visibility, one way or the other. So they get that marketing exposure for their products. And that is why I think we found that once companies have listed, we generally see significant increases in revenues, profits, employment, assets, and so on. And here we're just listing out, some of the persons that would be important in helping a company to list on an exchange. So you have your broker, you have your accountant, you have your attorney that you'd have to work with, the regulators, in the case of Jamaica, the Companies Office, Financial Services Commission, Jamaica Stock Exchange. In the case of Trinidad, it's a TTSEC, and it is TTSE. And then, of course, you have your registrar and transfer and paying agent that will allow you to interface with your investors, to make dividend payments, to distribute financial statements, annual reports, and so on and so forth. So I think that's really a synopsis of the benefits of listing on a stock exchange. And of course, I'm here to answer all the questions that you may have.